A very good morning, guys. Welcome to our second session that deals with our deemed accrual, which are found under our section 7. Under this section, we will look greatly at this deemed accrual that are found under section 7. For example, our section 7, subsection 3, where we will basically find out that also children are taxpayers too. Okay, our section 7, subsection 1, it's the one that deals with our accumulated income. Our section 7, subsection 2, we look at our married people, the people who are married. You have people who are married in community of property. You also have people who are married out of community of property. We also have our section 7, subsection 2, cap A, the one that deals with people who are married in community of property. We look here greatly in terms of the two specific type of income, the trade income as well as our invested income. Now, when you look in terms of your trade income, in terms of the people who are married in community of property, we are actually saying that if the people who are married in community of property, there is a spouse who is carrying on the trade, the income that will arise from that trade, it will be taxed in the hands of the spouse who is actually carrying trade. So you will be taxed separately on trade income if you are married in community of property, unless that business which you are conducting, you have both you and your spouse, you invested the shares, you have some sort of ownership, then there will be some sort of an agreement which you will split the income that arises from that business. Okay, now your trade income does not equal paid, as such I mentioned in the class. So when you're dealing with trade income, what we are saying is that the income that will arise from that, it will be taxed in the hands of the spouse who is carrying the trade. Okay, now we also have invested or investment income. Now investment income equal paid, where we look at the pension, the income that you're receiving from the pension, your annuities, your interest, as well as your dividend. So that income then, it is taxed equally, or there is a split on it in terms of the spouses who are married in community of property. So you need to take note that in terms of our trade income, there is no split, but in terms of our invested or investment income, there is a split between the spouses who are married in community of property. Now there is something which you need to take note of, the fact that if you are dealing with trade income, if the spouses are then conducting the trade or that business, or if it's falling part of their joint estate, then the business is belonging to both of them. They have ownership, they are principal owners, both the spouses. Then under those circumstances, there is some sort of an apportionment or some sort of an agreement in which the spouses have actually agreed that they will split the income that is arising from the trade. Now you need to take note of the anti-avoidance provision of your section 7, subsection 2, little b, where we basically look at the fact that it is the anti-avoidance provision that is trying to prevent spouses who are trying to avoid or reduce their tax liability by shifting an excess income to the other spouse. So in that situation, then you find that our section 7, subsection 2, little b, it's some sort of an anti-avoidance provision, which is very important here to prevent those spouses who are trying to reduce their tax liability. I'll make an example here. Let's say that we have a Mrs. B. Now Mrs. B is working in a company in which his husband, which is Mr. B, is a principal owner. Now if Mrs. B is working in this company, Mr. B in some way have this shareholding in the company, is a principal shareholder, so he's earning a salary which is much higher or greater than that of Mrs. B. Now let's say Mrs. B is working in the cleaning division. Okay, obviously her remuneration will be reasonably lower than that of her husband, because her husband then is a principal shareholder, so he's getting a much higher income. So Mr. B in some way will try and take some of his income and shift it split to Mrs. B. Okay, now SARS is then saying, in terms of the deeming provision of section 7 subsection 2 little b, it says that the excessive income, it is deemed to accrue to Mr. B, as he's the one who shifted that income to Mrs. B. So as a result, what we are saying is that Mrs. B will be taxed on her reasonable remuneration. So you need to also analyze the task of the work that is performed by Mrs. B in the company that she is working, on which Mr. B is a principal shareholder. Okay, we also need to look at a very important concept here, where we look at the concept whereby we are dealing with our section 7 2b, which I've explained in detail here, that if there's a trade income that is involved, you will be taxed separately in your hand on the income that you are getting, and if you are trading jointly, then there will be some sort of some proportion, some split in terms of proportionate share that you have agreed with that spouse that you are basically carrying a trade with. Okay, now we then need to look at our section 7 subsection 2b, that it deals with the deemed deduction for the person married in community of property. Now in this situation, we are saying that the expenses, they follow the income as determined under our section 7 2 and section 7 subsection 2 cap a. Okay, so therefore, if the donor spouse is the one who is deemed to receive the income, then it is the donor who is allowed the deduction relating to that particular income. Then we have our section 7 subsection 2 cap c. Now under our section 7 subsection 2 cap c, we are looking at the persons who are married in community of property. When you go through your saica legislation, which you should be having right now as we are going through our deemed accrual of our section 7, we have our section 7 subsection 2 cap c little a, that deals with the benefit from our retirement funds, our pension, our provident fund, our retirement annuity. We are saying that it is deemed to be the income that is derived by the member spouse only. So there is no split between the spouses who are married in community of property for our section 7 subsection 2c. So when you're looking at our section 7 subsection 2c little a, our section 2c little b, and our little c, there is no split in terms of this income. It's only deemed to accrue to the spouse who is entitled to that particular income. So for example, in terms of our section 7 subsection 2 cap little c, where we deal with the income that is arising from the patent or the copyright, it is deemed to be the income of the spouse who actually own such a right. Okay, so none of these income under our section 7 subsection 2 cap c will result in an income splitting between the spouses who are carrying on the spouses who own such a copyright. For example, in terms of our section 7 cap c little c, there will be no split of such from the income that is arising. Okay, then in terms of our section 7 subsection 3, it's an anti-avoidance provision that deals or that applies to children. Okay, so we're saying that our section 7 subsection 3, it applies to stepchildren and adopted children too. So it's here, it's in this provision where we find out that children are also taxpayers too, and I will also explain why or how will a children be taxed in this situation. So our section 7 subsection 3, it basically happens where there have been a donation or a settlement or other disposition that is made by a parent to a minor child, and it has resulted in an income being received by or accrued to that child. Now in terms of our deeming provision of section 7 subsection 3, it deems such income which is received by the child due to the donation that have been made by the parent to accrue to the parent who made that donation or that settlement or a disposition. So what we need to take into consideration here is that, for example, if I may give you an example, is that if a parent donates a rental property to his 16-year-old daughter, the rent received by the daughter, it will be deemed to accrue to the parent. Okay, now if the parents are married then in community of property, the income then that accrue to the child, it will be deemed to accrue in equal proportion to the parent unless that donation was from a joint estate, was not from a joint estate. So if it was not from a joint estate, then the income then it will be taxed in that individual spouse who donated that particular property into a child that have enabled this child to receive such income. Okay, now we are saying that we need to be careful if there is a property that is sold to a child at the market value. If there is a property that is sold to a child at a market value, there is no donation of such unless if we decide then to sell a property to a child at less than the market value. Now under that circumstances, then we are saying, okay, we have sold a property at less than the market value, and the portion or the difference that arise when you take the market related value and the amount at which you sold the property to a child will be in some sort of a donation. Okay, and also where there are situations where there have been an interest-free loan that is given to a child, then we need to be careful in terms of some sort of a donation that would result or that will have been made to a child as a result. Therefore, the application of the deeming provision of section 7 subsection 3 will then kicks in. Okay, and then we also need to look at our section 7 subsection 8, where the resident now are trying to avoid paying tax by shifting particular assets to our non-resident. So let's say, for example, that a resident make a donation of a rental producing property to a non-resident. Now under those circumstances, what will happen is the income that is received by a non-resident, it is deemed to accrue to a person who actually made that donation. So this is found under our section 7 subsection 8 of our saica legislation, where the act deems such income that is received by the non-resident to accrue to a resident who made a donation. Okay, now we also went on and discussed the concept of our section 7 cap B, where we look at the concept of our variable remuneration. So in terms of our variable remuneration, we are saying that we look at things like, you know, your overtime, your bonuses, your commission, and your leave pay. These items, they are deemed to accrue to the taxpayer only when they are paid. So you'll include them on the date on which they are paid to you. So if an employer promise an employee a bonus, it is deemed to accrue to an employee on the date on which that bonus is actually paid. There is another one that deals with an interest that you are receiving, or that SARS is basically paying to you. That interest which you're expecting to receive from SARS, it is deemed to accrue to the taxpayer on the date that it is actually paid by SARS. Okay. So our section 7 cap B deals with our variable remuneration. Okay, now the other thing which we need to look at is that of our section 7 subsection 9 that deals with the deemed disposal of assets less than the market value. Now if an asset is disposed for less than the market value, the difference, as I've stated previously, that the difference between the selling price and the market value is deemed to be a donation for the purposes of our section 7 of our deeming accrual. Okay, so we need to look at the implication that could fall into in terms of the provision from our section 7 subsection 2 up to section 7 subsection 8 as far as the resultant income from that donation is concerned. Okay, and then we need to look at our section 7 subsection 10, where we talk about the relevant disclosures that need to be made to serve for the items on the donation that we have made, or your disposition, your settlement during the year of assessment. So we think that the disclosures must be made in writing to the commissioner and submitted with our income tax return for that year. Okay, so you can see here that our deeming provisions, they are specifically stated within the legislation, and you can go through them. It's quite a very interesting section to look at. And up until the next time, I thank you.